Welcome to Dollars and Cents with Freedman Financial, the home for financial advice in a language you can understand. Created by Marc Freedman of Freedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Freedman Financial.
Welcome to another edition of Dollars and Cents with Freedman Financial. My name is Marc Freedman.
And I'm Marion Gilman.
And we're here to provide you with some financial advice in a language you can understand. This past week, we hosted a couple events for some of our clients to get some feedback from them on what is it that we could be doing a little bit better, what would they like to see from our office. They were quite kind, actually, to us.
They certainly were. But we have the best clients.
We do. We really love our clients. Yeah. And it was a nice array of people at each of these luncheons that we hosted. It was just a random group of people that we selected. Some people that have been with us for 3 to 5 years, others that have been with us for over 30 years.
Right. It's amazing. And, you know, we used to do this a lot 10, 15 years ago. And we had gotten away from it for some reason. However, you know, it's enlightening to hear what the clients have to say. Although our clients have been very generous with their feedback over the years, just one-on-one conversations. But it's nice to have a group together and get a little bit more feedback on specific topics.
One of the things that I found quite validating is I have always said that it didn't matter which client we put in front of another client to have a conversation about what we do for them. I mean, there's no sharing of the money or the wealth or anything like that, but the services that we provide. And we could sit in this room of 16 people and everybody's head shook that they were all getting the same level of service despite the different needs that they might have had as clients.
And they're all getting the same message as well from us. It's not this investment or that investment. This is what's important. Follow the stock market, buy this stock. No one even mentioned that because that's not what we do. We focus on long-term financial planning, how to be successful in creating a lifestyle that you would like in retirement.
Yeah, and so many of them had said before they had joined our firm, they had been with other financial advisors, many of whom they felt like, many of whom they felt like every time they got a call from the financial advisor, the advisor was calling to sell them something. And
they never wanted to pick up that phone.
Yeah, they were scared to pick it up. And it was so refreshing to hear from them how excited they are when the phone rings or when they come into the office because they know that that is not the conversation that we're going to have. Right. We're going to be more interested in what's going on in their life to make sure that
their families' lives.
Make sure we're all making smart decisions. Yeah. But, you know, one of the things that came out of this meeting was we had explained to folks that since we've been doing financial planning since 1968, when my father started the firm.
Not us.
Right, no, not us.
I'm old, but not that old.
Many of our clients, you know, face death or their family members face death. And it's one of those instances where, if you think about it, if a parent of yours passed away and perhaps you were the chosen child that gets to drive the ship after mom or dad passes away, or you're the surviving spouse, how much experience do you have in knowing what to do when someone dies?
None, right? I mean, typically that's the case because this is the first and maybe the only time you will ever have to do this.
And one of the things that we've learned is we have 20 to 25 deaths a year in our office.
And it's not because of the markets.
No, it has nothing to do with the markets, and doesn't have anything to do with the bad coffee we might serve here either.
Oh,
But you know, and I'm not saying it's always a client. Perhaps it's a parent of a client or an uncle of a client, and they've been put in charge of having to help this out. And we find it fascinating how uninformed people are about what really happens as you begin to settle out in a estate for somebody.
Right.
And we thought today might be an opportunity for us to share some of the learnings that we've had. And it's just going to be a smattering of them, just a few. There's so much depth of information. But Marion, what is one thing that comes to mind?
Yeah, I mean, I think the most important thing, and one of the most important things we do, is to be certain that each and every client has beneficiaries on their accounts, named beneficiaries. So, and a named beneficiary means there's somebody designated to receive whatever's in that account should the account owner pass away. it's critical. It's critical in order to settle an estate in the most efficient way possible.
Yeah, and so think about this. Many people say, well, I wrote a will. That will take care of it. Marion, why doesn't that work?
Well, because if something has to go through the will, it has to be determined through a probate process in the courts that it is eligible to go through that will. So, that can be time-consuming and it can be costly. So you really want a named beneficiary, not something that goes through the will. The other thing is, if you have a named beneficiary on a particular account, and all retirement accounts should have a named beneficiary. They technically can't be set up without one. If you have a named beneficiary and you write somebody else in your will that should get that money, the named beneficiary gets it. So the named beneficiary supersedes the will.
Yeah, so two important points there is, think about this. Many people, they start their first job. We've seen many clients who went to work at GE, for instance, and they were 18 or 19 years old, 22 when they started, and they didn't have a relationship with anybody at the time, and so they named mom as the beneficiary. And they continued to work there year after year after year after year. They meet someone, they get married, they have kids, they go visit an attorney, and they write in the will, of course, that my spouse will be the beneficiary of all of my assets. However, if that person dies and mom is still alive, mom will get the proceeds from that 401k plan, not your spouse.
We've had that situation
We
happen
have.
in our office, unbeknownst to us. Typically it was a client that came to us after their spouse died, but when the spouse died, that their parent or somebody else was named as the beneficiary.
Yeah.
It can be ex-spouses as well, and that doesn't go over well.
So I want you to think about any of the accounts that you might have that just has your name on it. So let's say there's an account that says Marc Freedman. There's no addendum on it that says joint with rights of survivorship or joint or members in common, whatever it is. If it's just your name, and that's all, and there's no beneficiary that's attached to that account, when you die, you might say, well, my spouse would get that because they're the beneficiary that's named in the will. Well, that account that's just in your name goes to the estate of Marc Freedman.
Right.
And there's a whole probate process. And many people say, I want to avoid probate. And you do that by naming beneficiaries on your account.
Correct. And as I mentioned previously, on a retirement account, you have contained within the retirement account is the form where you name a beneficiary. So in order for that account to be set up, you typically have to name a beneficiary. But even on a non-retirement account, an account that is after-tax money that's set up, that's just money you've saved, a bank account, for instance, it's just in your name, you can add a beneficiary to that through a form as well, but you have to request that form. That form is named either a TOD, transfer on death, or a POD, pay on death. And it's a very simple form to fill out, but it will allow you to avoid a probate.
Here's something else that we see is oftentimes our clients will provide us with a copy of their estate planning documents that might include their wills, their trusts, their powers of attorney, etc. And I'll go looking through the will and I'll read it. And folks agonize sometimes over how they're going to give certain amounts of money to certain people to share some of their wealth upon their death. Right. I'm going to give $5,000 to this niece, $10,000 to this person. In fact, we had a client years ago who listed an amount of money to some of their favorite waiters and waitresses that they visited over the years when they would go to favorite restaurants. And they named all of those people on there. And they agonized over that. And sometimes they would call and they say, I want to change this. And they'd contact their attorney to change the people who were listed in their will. Only to find out that because all of their other assets had beneficiaries named on them, the people who were listed on the will got nothing.
Nothing went
because
through
there
the
was
will,
nothing that was
right?
going through probate. So
Wow.
think about this. If you were going to have to count on somebody to read your will, to design and decide who's getting what money, it means your estate likely went through probate first. So if you're trying to avoid probate, you're also saying, I really want to try to avoid much of the writings that I have within my will. I'm trying to do this beforehand by naming beneficiaries to my account. And,
Yeah. I mean, that's a perfect example, though, of,
and many people forget that.
Yeah.
They don't necessarily hear that that's what happens.
Exactly.
So
well, the other thing we see very frequently is clients will have a trust set up. An attorney will draw up a trust. But unfortunately, there's some non-communication, I think, and clients don't understand that that trust has to be funded. You have to actually put something in the name of the trust in order for the people written as beneficiaries of the trust to get the money. And that's a disconnect, I think, and often, very frequently happens.
So let me share another thought. Many of you have heard, if you go back, it's an old wives' tale, I say, when people say, well, I have a life insurance policy so that you can bury me. We hear this a lot. People used to maintain a life insurance policy to bury them.
Right.
And that's because in the 60s and the 70s, most people who passed away didn't have much as a legacy to pass on to the next generation. Their sources of income was Social Security, a pension. But when you died, those things stopped.
Right.
And beyond that, I mean, you were living on what was called a fixed income,
It
right?
really was fixed.
Yeah, it was fixed. You know what you were getting. You had a house that might have been worth $29,900, believe that,
Yeah.
And maybe $1,000 or $2,000 in the bank. But when you died, what would happen is your spouse or your beneficiaries would turn over the life insurance policy to say, when this claim is filed, we will assign the life insurance proceeds to you. How often do you think that happens today? It rarely,
Never.
right? If at all.
Right.
I mean, you may think you have a life insurance policy to bury you, but if you pass away and your spouse, your children go to the funeral home, the funeral director isn't waiting for the life insurance. You know what they want?
Credit card.
A credit card, that's right.
That's right.
They want you paying. You can get reimbursed by the estate. They don't want to worry about that stuff.
Right.
There are so many different pieces and parts to the process of what happens following someone's death. In fact, we have learned that we are generally the second or third call that somebody makes when someone has passed away.
Right.
Generally, you tell the immediate family, and then it's us. Because at Freedman Financial, one of the things we take great pride in is knowing where everything is and what everything is worth in your life. Instead of just knowing, I know about this investment account or this bank account, we can produce a report that says to the children, to the family, here's what mom and dad had.
And here's where you could get that money for paying the funeral expenses.
And that's what we call financial advice in a language you can understand. If now is the time for you to get serious about your financial planning and investment management needs, I hope you'll give us a call. 978-531-8108. That's 978-531-8108. Or visit us on the web where you can get our free weekly newsletter. You can learn about the services that we offer, what our fees are, everything. You can see it all there. We are very transparent. Here's the website, FreedmanFinancial.com. That's Freedman.
2 E's and a D.
Financial.com. And that's going to do it for us this week. Have a wonderful week, everybody. We will see you again with more financial advice in a language you can understand. Have a great day.
Bye-bye. Enjoy.
During today's episode of Dollars and Cents with Freedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.